As the U.S. housing market adjusts to a new reality of higher for longer interest rates, with mortgage rates now above 6% for the first time since 2008, Fed Chair Jerome Powell admitted yesterday that the housing market will likely have to go through a big downturn to get it back to normal levels. Take a listen.
The deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. That's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place.
Let's bring in Century 21 CEO Mike Miedler, who's CEO and president, by the way, to discuss all this. Mike, we've already seen a pullback when you think about where the housing market was a year ago. Certainly much slower now. We have mortgage rates for 30-year fixed now above 6%. Fed Chair Jay Powell, they're talking about a correction. How significant a pullback you think we'll see?
Yeah, Akiko, thanks for having me on. I mean, we've already seen from over last year a 20% decrease from a units perspective from what we saw in 2021. NAR just reported that yesterday. And I think obviously housing is probably one of the sectors that is the most sensitive to these fast rates that we're seeing hike up, right? I mean, we've seen literally a double in the mortgage rate over the last 9 months. As you said, I think you got to put that a little bit into perspective. So we're sitting at, I guess, around 4.8 from what's reported yesterday, million homes sold at a pace that we're at in August. But if you go back to call it January, where we're at 6.5, slowing down to March 5.7, May 5.4, I think what you're going to see is us even out right at about 5.2 or 5.3 million homes sold in this country, which quite candidly is about what is normal, like what we've seen from 2015 to 2019. As you know, price is what's really being affected right now. We've had 126 months in a row of year-over-year price increases. However, over the last 2 months, we've seen a deceleration of the median price in this country from an all-time high of about $414,000. So there is some stabilization that has to take place. And I think we're definitely headed back more to an equilibrium market where you're going to see inventory obviously continue to creep up and us be in a more, like I said, fair spot from a home buyers and home sellers perspective.
Yeah, from a home seller perspective, we're seeing increasingly a lot of sellers who are saying, well, maybe this is not the time to put my home on the market. I could make much better money renting the property out given where those rates have gone up so much. What does that mean for first-time home buyers who, number one, when the rates were so low, we're getting squeezed because there was so much bidding happening. And then now looking at their monthly mortgage saying, this is just not going to be sustainable for us.
Yeah, I think that's obviously the real trouble spot for us. I mean, first-time home buyers are generally anywhere between 31 and 33% of the market. I think last month it was about 29%. And obviously these rates, when you're talking about a couple $100 more in this big run-up that we've seen, means a lot to your first-time home buyer. I think Jerome Powell said it best. It really is all about supply and demand. And so I think what we really have to look at is where inventory is today. And quite candidly, the large generations and household formations that are coming into the market. You've got millennials, 90 million strong, the largest generation in U.S. history. They won't even reach the median age for the first-time home buyer for another 2+ years. And then you've got the second largest generation in Gen Z right behind them. All storming the market, all coming out there looking for their fair share of the American dream. I really call housing kind of the gateway to the middle class, where people are building the most amount of their wealth and equity in an asset. If you look at 2012 to 2021, we just underbuilt in this country. And I think it's really an issue that we're going to have. And what we'd like to see is more sustainable, obviously, housing come into the marketplace for what we're going to see from a household formation for years to come.
So put this in historical context for us. For those first-time home buyers who have been trying to buy for the last few years, they've seen a slowdown. Prices are starting to drop, and yet rates have made that monthly mortgage pretty much equal out or even push higher. Do you still try to go out and lock in a rate, get a house in hopes that you can refinance down the line? Or do you just stay on the sidelines until, let's say, spring of next year when things historically pick up?
Yeah, Akiko, I think that's exactly the question you got to ask yourself, right? I mean, first of all, I'd say, one, what does my credit score look like right now? And two, am I stocking and putting away enough for not just the down payment, but the closing cost? If I'm a first-time home buyer like I was many years ago, I'm trying to save as much money as I can, scaling back on maybe one or two streaming services or, the night at the movies and putting away as much cash as possible. And what I think is you're seeing, obviously, like I said, equilibrium. No longer are you going to have, a run up in 50 buyers, bidding the price 20% over, where people are waiving, appraisals and inspections and all those other things. But historically, if you look at it, if you go over literally since 1971, the average mortgage rate in this country is about 7+ percentage points. And so sitting at 6 today, you're still in an area where, it's below the average. But to your point, you're almost kind of dating your mortgage rate, as a lot of people like to say in our business, because there is going to be an opportunity when you're in this for a long term, when you're using your home as your shelter and a long-term investment, like most people do, 7 to 10 years, you're going to get an opportunity to refinance somewhere in the future, is what one would hope. I've done it myself. Many have done it over the last few years. I don't know that we'll ever see the rates where they were, last year, but I think you'll get an opportunity to come down from where we're at today.
Marry the house, date the rate. That's a motto to keep in mind for those who are out there looking. Century 21 CEO and President Mike Miedler, as always, appreciate your time.